Hey guys, welcome back to the channel. In today's video, I'm going to be showing you guys a script written in R that'll detect pivot points for virtually any stock, ETF, or cryptocurrency. I recently found a post that Bitcoin had this pattern on the distances to the pivot points. So here, for example, the first row, we have the all-time low of 2015 for Bitcoin to the all-time high in 2017. That lasted 1,064 days. From that same high to the low in 2018, the length was 364 days, and so on. So it had this pattern of 1064, 364, then that will make the high that we saw in October 6th of 2025 the new all-time high, and that we should expect a continuous downtrend that's going to last 364 days until we start moving back up again. And so I wanted to test this claim since it seems too perfect, having these lengths be 364 and 1,064 days. And so we're going to go through some R code that's going to generate a table and show you this information and see what the actual lengths are. And it's also going to create a chart using the pivot points. So here for BTC, it's going to show you where those pivot points are using the green and red arrows. And I know that they seem kind of off, but if you zoom in, it'll show you exactly where those pivot points are. If we go back to all again, so the functions we're going to be taking a look at are specifically for assets that are in a clear uptrend, and it probably won't work if the asset is in a continuous downtrend. So that's going to be kind of a caveat for the script, because what we're going to end up doing is extracting the all-time highs and use that information to find periods of where it bottomed in between. And then by using the last row in our table, it's going to make a prediction of when we can expect the next pivot. So let's go to our R script. So we're going to start off by requiring these three packages, and in line 11 is where we're going to enter our symbol, so that in line 12 we can get the daily data for that symbol. Now in order to find the price pivots, we're going to use three functions, and we're going to start off by using find max. Now here preferably we're going to insert the high prices for the asset that you're analyzing, and what we're going to do is split up the asset into years so that there's no overlap in finding the max price in any given period. Once we have those years, we're going to insert those years into an lapply, and what we're going to be searching for is the max price that year, and it's going to return a data frame containing the year, the date in which the peak occurred, along with the pivot price. Once we have that, we're going to convert it back to a data frame, and then using that table, we're going to step into each row and we're going to verify that the price is in a continuous uptrend. And the way we're going to do that is by analyzing 2 years at a time. We're going to come to the conclusion of either two things. One is if the current year is higher than the previous. If that's the case, we're going to insert a 0 for the previous year, since we only care about the max prices. The other outcome is if the current year is lower than the previous, and if that's the case, then we're just going to place a 0 for the current year, again trying to search for the highest continuous price. And afterwards, we're just going to be dropping all the zeros in the pivot price column. Now it could be the case that in some years you get a turnaround from a continuous drawdown, and we want to make sure to only keep the all-time highs. And so we're going to be using table to search again if there's any instances where there's a drop in the price in between our all-time highs, and then finally just returning that table. Now that we have our all-time highs, we can find our pivot points to the downside. And again, X is just going to be the low column in your data set, and we're just going to pass in the table generated by this first function. So if we open this up, we're going to start off by first extracting the pivot point prior to our first all-time high. And so we're going to do a search of when that date occurred, and we're only going to focus up to that point in time. We're going to find which of those was the actual low, and we're going to return a data frame containing the year, date, and the pivot price. Now we need to do the same for the instances in between all-time highs. Extract the low location, and again returning a data frame with the year, date, and the pivot price. And then finally just row binding the first result with the rest. And then our last function is just going to combine both of these functions, and it's going to put everything together. So we need to pass in all the lows and all the highs, which would be your low column and the high price column in your data set. We're going to start off by using our find max function and passing in all the highs to generate our max table, which then gets passed into find min along with all the lows to find the in-between periods. Next, we're just going to add the types. So for our max table, we're going to insert max, and for the min table, we're going to insert min to kind of help us aid and get an average of the lengths for both of these categories. Next, we're just going to row bind both of these tables. We're going to reorder by date. We're going to add the distance in days in this case, since we're using daily data. We're going to add the simple return as a column as well, fill any NAs, and then just return the table. Now in the next chunk, we're going to use our find pivots function. We're going to pass in all the lows and all the highs to generate our table. And here we get a summary. So the average duration for for Bitcoin to the trough was 370 days, not 364. And the average trough to peak duration in days was 1,060, not 1,064. So both of these were close from the screenshot that I showed you at the beginning of the video. And by using this data, it predicted that the next all-time low would occur in October 11th of next year. Well, according to the screenshot or the claim. But if we take a look at table here, so here in this table, we're going to exclude the first row in our calculations since this was the starting point and the all-time low. But from that date to the next, which is our all-time high, up to this point, the length in days was 1,068, having a 116x return. And from this date to the next all-time low, which was in 2018 and lasted 363 days, saw a decline of about 84%. And then from that price to the next all-time high, which was in 2021, period length was 1,061 days, having a 20x return. And then it declined again for 376 days, reaching the pivot point there with a decline of 77%. And then finally, from that pivot point until we are now, it reached the highest level 1,050 days later on October 6th, having a 7x return. So as you see, there is some sort of pattern, but it's not definitive and it's not exact as the screenshot claimed. And it could just be mere coincidence, but it's quite interesting that the days up to this point in time are relatively consistent. And now that we have this table, we can go ahead and combine it with our daily data to generate a chart using HighCharter. And so in the last block, we're just going to extract all the peaks and all the troughs so we can add those pivot points on the chart along with the open, high, low, close for the asset as well, and it will generate an interactive chart. But that's pretty much it for the script, guys. You could run it by changing the symbol in line 11 of the script. And as I mentioned at the beginning of the video, I wanted to verify the claim from the screenshot I showed you at the beginning of the video, as the data that they provided seemed too perfect. And so with that, guys, this concludes the video. I hope this was useful information. I'll leave a link down in the description area to my Patreon where you can find the script. Please consider subscribing to the channel if you haven't done so already. Thank you so much for watching, and I'll see you guys in the next video.